Hey everybody, how are you my friends? This is Jose here. We are about to start the session in like 20 plus seconds. As always, quick sound check. If you could type as a confirmation on the comments box, if you could type that sound is okay, that would be greatly appreciated. So I know we can start. Wonderful, perfect timing. So let me go ahead and maximize the presentation slide so we can start our day in an orderly fashion, okay? I missed you guys. We haven't got together in the session since the last Thursday. We had the weekend off, isn't it? We had no sharpening last weekend. We'll have 2 sharpening sessions actually next weekend, so we'll catch up with that. But anyway, it feels like it's been a long time without getting together, and I was missing it. So good to see you all, guys. Fantastic. And let's get started. Okay, so again, today we are getting together for short-term trading. My name is Jose Blasco. I'll be your guide. And today is June 4, 2019. Before we start, as always, disclaimer, the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides this video purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. And as a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive when using our products. Good. So legality and the presentation of the session is out of the way, and therefore, let me close the slide as well. We don't need that. Therefore, here is our beautiful TradeStation platform ready for the trades that we're going to be planning today in our intraday trading session. I also have a trading view as well. So just quick little tour if you wish. So I got the 4-hour setup for currencies with trading view. So chart on the top, 240-minute time frame, chart on the bottom, 21-minute time frame. So this is going to be the setup for currency tradings that we'll use later today. 4-hour setup. For the 60-minute setup, the 1-hour time frame is on the top. The 8-minute time frame is in the bottom. Okay. And then when it comes to TradeStation, I have loaded and ready to shoot the S&P Futures workspace and also the NASDAQ Futures workspace. In both, I'm using the 15-minute time frame below, which is going to be the time frame that we use to identify what is the right side, which should we be in the market. And then in the upper one, we got the 3 edge time frames times time-based, 2-minute time-based, share bars and tick charts. Okay, and same for the S&P, even though the quantity of shares and ticks are different than the NASDAQ, as you know from prior sessions. Anyway, so let's begin. Okay, we got 28 minutes before the session start, and obviously we'll be delighted to take trades before the session start. Normally we would experience a greater speed of movement as the US market opens and the session begins, but it doesn't mean that we cannot take a trade, or maybe even 2 at times, during those initial 28 minutes of waiting time before the opening. Okay, so what do we have? Let's begin with the S&P. We first ignore the last candle, so forget about the last candle like it didn't exist. And what do? We look at the prior one. The prior one had a close above the average and DMI is green color. What does that mean? This means we are in an uptrend and the uptrend is strong. So the first thing I'm going to do, actually is the second step, I'm going to look at the 60-minute time frame instead of the 15. Okay, give me a second here. Here we go. So 60-minute time frame instead of 15. So I'm gonna look at where my target should be by activating AutoUFOs for that bottom chart. Okay. So when activating AutoUFOs for the bottom chart, let me maximize this, and that will be more visual. So let me see if we got any red UFO close by. Here we go. This is the one. Okay, so I'm just gonna click and hold to be able to see the price, which, as you can see, the price is 2776.5. That would be our final target for long trades on the S&P using the setup that we have, which is the one I quickly re-summarized a minute ago. Okay, so back to the 15-minute time frame. Now that we know the target, we keep this number in mind, 2776.5, and again we know we are on an uptrend. Okay, so now that we know that, step 3, we need to identify good entries, and therefore we want to use prices around the EMA, which is 2766, and we want to look at 66 and see if above we got any green UFO. Here I would say maybe I'm gonna have to click and double check, and 66 here, it's right under. Okay, so right under. Okay, but anyway, it's actually looking pretty okay, because 10 minutes from now we're gonna have a close of the moving average. By the way, let me double check again this UFO here, the one in the middle. What is the top value of that UFO? The top value is 65.75. Okay, so actually that would work. Okay, that would work. Yeah, it's gonna be very tight, but I would say that would work. Meaning that if the S&P comes down and reaches the average, okay, which is currently 2766.51, that average will likely go down by a little bit. Okay, and that little bit may be more or less that 2765.75, which is the top part of our green UFO in the short time frame. Okay, so that would be a good entry point. Okay, we need to be aware as well that, as I was saying, 9 minutes from now we're gonna have a new update on the average, and because this is moving up as an average, okay, moving up, so it is to be anticipated that the average will have a new closing price slightly higher, and slightly higher maybe in the region of the 67, something like that. And if that's the case, we're gonna have those UFOs here on the right, which are in the region of the 67, as you can see. Okay, so again, we do have an opportunity to place an order right now as we speak, and probably we will likely rectify it in 9 minutes if we have not got filled at that time. Okay, so let's go ahead and place the order. The entry price is going to be 65.75. Okay, so I'm just going to use my matrix looking for 65.75. Okay, here is 65.75. Okay, and what I'm going to do here is I'm going to just click. Notice how I also made sure my quantity was 2. It doesn't mean in your case it has to be 2. In your case, you will have to calculate the right size that you want, depending on how much you want to take, as well as if you are using real capital in this trade or simulated capital. Okay, but in my case, I'm using 2, so I can scale out. So here we go. Perfect. Actually, you can see very nicely here. We have the entry is right there. The stop is right here. And that particular distance automatically has been replicated, and therefore we had our safety target put in place automatically. Okay, so the only thing I need to change now is the final target, which currently is 2770.75, and move it up 6 points to 2776.75, which is the target that we earlier got from the 60-minute time frame, not the 15 that we got below now, but earlier we changed it to 60, and we concluded our final target should be that 76.5. Okay, so 76.5, which is right there. Okay, here we go. So we have it. Okay, entry, safety target, and stop, and then our final target to catch this potential move in an uptrend condition for the S&P. Okay, let me do something, guys, because I am noticing a little bit of delay on how TradeStation responds. So I'm just gonna close my TradeStation and reopen it because I can feel that something's gonna happen, and this many times has a lot to do with the fact that I am sharing the screen on YouTube, and when I start the streaming, a lot of the power from my graphical processing units goes derived, and I'm not sure why this happens sometimes. My TradeStation loses a lot of power, so by resetting normally everything goes back to normal. If you are not sharing a screen, this should not happen to you. So anyway, so I am restarting. Everybody's very quiet. How's it going so far, guys? Any question? Yeah, I'm gonna have it on the screen right now again. Sorry for that. Yes, so the entry was 65.75. Okay, 65.75 was the entry, and the stop, I am not sure. So I'm gonna show it to you right now, and we will answer that question precisely. The entry was 2765.75. Okay, so loading the S&P workspace. Is going to start loading the NASDAQ workspace in just a second, and we'll be ready to continue. Okay, it seems that all of you are good. Very nice. Stop. Here we go. Now you can see it very well, Devan. So 65.75 was the entry. Stop 63.25. Okay, as Dirk just confirmed. Safety target 2768.25, and the final target, as we said earlier, that final target is 76.5. Okay, so this is the trade that we have in front of us. Okay, and again, it's a valid one for us to execute. Yeah, so all good, very, very good. Yeah, great emails, guys, by the way, during this weekend, where we had a little bit of a pause with the sharpening sessions. Some of you have been sharing how is it going, and questions and so on, and some of the things that you guys are doing are very well done. Okay, a new green UFO popped up in which time frame, Dirk? You mean the one on the right, the tick time frame? So anyway, looking at the NASDAQ as well in parallel. So what do we have in the NASDAQ? We have the same set, okay? Uptrend, strong, etc., etc. Okay, so what I'm going to do with the NASDAQ as well is do my step 2, which is to look at the 60-minute time frame and basically find my targets. Okay, so I'm going to activate AutoUFO for the 60-minute time frame. Let me maximize that window. And in this case, there is a lot of room for movement on the NASDAQ, since that UFO is located at 7190.25. Okay, so we're talking about 130 points, okay, which is a huge amount of room for this trade, okay, which is fantastic. Okay, now careful there with margin requirements, because if this trade was not to reach target before 5 p.m. Eastern time, then the futures markets would close, and you would be applied a different margin amount for you to remain in the trade, and you need to make sure you have the capital in order to avoid a margin call. Okay, another way to treat this trade would be that, hey, if it's almost 5 p.m. Eastern time and you are not close to your target, then just close the trade, take whatever profit it is, and that's it. Okay, that would be another way to deal with it. And the reason why I'm pointing at that is because we are pretty far from that target, which is very good, but at the same time, when you do intraday trading, you want to make sure you are out at the end of the day, right? Nothing wrong with extending the trading to multiple days, but there is a margin requirement that will impact you, and you need to be aware of that, which probably you are, okay? But if not, I wanted to remind you. Yes, S&P and ES, Pedro, very good point. Those are correlated markets, and actually we even talked about in some past sessions that, so let's say I plan a trade with the NASDAQ, and I also plan a trade with the S&P. Let's say both of them and meet my entry at the same time. So next thing you know, now I just double my risk, right? So you should be quick with your actions, guys. And if you get filled on the S&P, cancel the NASDAQ, or vice versa. Or if you are willing to be filled on both, you should be cutting by half your position size. If normally you would take the trade with 6 contracts, maybe you go for 3. Just so you can take the NASDAQ and the S&P trade at the same time, because those markets are correlated, okay? And again, correlated is not a bad thing, but it does increase your risk, just like it increases your reward, right? It's either you profit on both or you lose on both, you know? If you were to keep doing the same thing the whole year, in the end, it's not really a problem, but short term, it could be a problem, because let's say you took 2 losses in a row with both markets together at the same time because they are correlated. Next thing you know, you just accumulated 4 losses, and that's a little painful, right? It may hurt a little bit your confidence level for the next trading day. Okay, so we are talking about mitigating not only the risk of an account, but also the risk of hurting our mindset as traders as well. We need to be sensitive to the money aspect of trading as well as the mindset aspect of trading. Okay, but by the way, Orlando, I see you are with us today. You made it, so very, very well, and you sent a fantastic email related to trading psychology this weekend. I haven't had the time to respond to you, but very, very, very healthy and very, very good thoughts, clearly coming from the time and the effort that you are putting in place and the experience that you are developing yourself. Okay, so way to go, my friend. Anyway, so what do we have here? Looking at the NASDAQ, we have 46. Okay, when it comes to 46, we have, you would be entering basically in the bottom part of this UFO. So I'm not saying that it cannot be done. Okay, I'm not saying it cannot be done, but at the same time, you're kind of, if 46 was to be the beginning part of the inner circle, I would be quite comfortable taking the trade. But being 46, the bottom part of the inner circle, basically you are relying on this portion of the UFO, which is, if you wish, the weakest portion of the UFO. Okay. In other cases, for example, this one, you have the inner circle located much lower. In this case, the lower portion of the UFO is the strongest one. But in the case of the UFO on the left, the inner circle is much higher, as you can see, is way higher, as you can see, is right there, and therefore the bottom portion is weaker. Okay, so not too excited relying on the 2-minute time frame, and I would not do it. Okay, keep looking at 46s, same story here. Okay, so the very bottom part is 45.25, so 46 is right there, same story. We are below the inner circle, which is the greatest concentration of orders. Okay, and if you look at the tick time frame, then 46, we got nothing. Okay, so at the moment, I would say that we have no trade with the NASDAQ, but again, well, actually, we just got an update, isn't it? Let me see. And no, it's correct. I have the right values. So 47, okay, and if it goes down, it's going to be 46, which is what I saw earlier. Okay, so not excited to plan a trade on the NASDAQ at the moment, and certainly I need to go back to the S&P to confirm and double check that the trade I planned earlier is still valid. Because notice that earlier I was relying on that. You probably remember me mentioning 66, okay? And we ended up using 65.75, but now notice how the average is 67.72, which is almost 68. So when the S&P drops, okay, when the S&P drops, that 67 again will go lower. Okay, now because that 67 is almost 68, well, now it may be pointing around, more in the 66s or something like that. So somehow what we have now is that we may have a situation where the S&P falls to get to this level of, let's call it 67 or 66 and a half, and from there turns, goes up, and we missed it. Okay, where 66 and a half, if you were to do the math, 66 and a half is more or less here. Actually, is the inner circle, actually, is that inner circle. Okay, so 66 and a half is that inner circle. And therefore, what you would see on the left, on the right, would be something like that, right? While, if we leave the order at 65.75, we're gonna miss the trade. Okay, so that was not an action to be taken in the prior candle because the average was lower. Okay, but now that the average is at a higher price point, because every 15 minutes that chart updates, well, it would be advisable to rectify our entry, right? And again, 66.5, something like that would be ideal, which is the inner circle. Okay, but since I don't want to miss the trade, okay, what I'm going to do is basically rely on this bottom UFO, which has a beginning located at 67.5. Okay, 67.5 is the very, very, very beginning. Okay, so yes, I will be increasing my risk by almost 2 points, but also I minimize the probability of missing the trade. Okay, and our job is to take trades, not to miss them. Okay, only if they meet our rules, but that one certainly would meet our rule. Okay, so I'm just gonna move the entry to 67.5. Okay, the moment I do that, this is moving everything around, isn't it? Now notice how my stop here is in the middle of nowhere. Okay, so I'm gonna have to move my stops to 63.25, which is where it was before. Okay. Again, I'm gonna have to rectify my safety target as well. So the difference between 67.5 and 63.25 is 4.25 points. So if I add this to 67.5, which is my entry, that would bring my safety target to be 71.75. So 71.75 would be right here. Okay, and then my final target, okay, is gonna stay where it was, which is 76.5. Okay, that was the same that we said earlier. Okay, so basically, you know, the nature of this trade now is less beneficial from a point of view of risk and reward and the relationship between risk and reward. But at the same time, now we are in a position where we are less likely to miss the trade. Okay, and we still got two UFOs working for us, the one on the right, also the one on the middle. Okay, and we have the moving average and the trend is wrong, and all the different, the various components that makes this trade to make sense. Okay, so good with the S&P. I'll give you just a sec in case you need to rectify yourself or make a note that your new entry is 67.5, stop same location 63.25, safety target 71.75, final target 76.5. Okay. Those are the parameters of the trade in case you want to update on your system. So we are ready to execute. So let me take a look at your questions. Jose, are we using the same time frames for the micros? Yes, if we were to execute with micros, and this is something I have a little homework to be done there, which I'm waiting a little bit to do it because it's micros are potentially such an interesting product. At the same time, micros are very new. And therefore, I'm just waiting maybe 1 or 2 months to get more historical data and volume data and so on to see what's the reality of those products. And then, you know, we'll do a session on micros. But basically, if I was to trade micros today, my recommendation to you would be that your analysis is not done with the micros. Your analysis is done with the S&P, okay, the one that we're using, the E-mini contract, not the micro E-mini, just the E-mini without micro. Okay, and then the placement of the order would be a different symbol. Okay, it would be the MES, right? The micro, but the analysis I would still do it with a bigger contract. Okay, not with a small one, because again, the levels of liquidity that we are seeing in the micro minis, even though they are real, they may be somehow artificial in the sense that when a new product is launched in an exchange, it's quite common that exchanges that want to promote the product, is quite common that even though there is lack of liquidity or limited liquidity, they still narrow the spreads. Okay, they are willing to take less advantage in the form of arbitrage, and they really shrink those spreads very, very much. So people get very excited to trade them. But then as time passes, they start getting those spreads to go back to what they should be. And when that happens, we'll see what happens if the micro minis remain with the same amount of volume or volume drops. Okay, and so we'll see then what is the real liquidity for that product, which I would say probably is going to be fine because we are talking about the S&P, the NASDAQ, etc. Those are big products, but at the same time, you never know. Okay. So, you know, in the meantime, I would certainly advise you to chart using the S&P and execute with the micro minis, but don't chart the micro minis, only use it for placement of orders. Okay, that would be my recommendation there, guys. Yeah. Milan, I didn't double my profit potential. Maybe your comment was from earlier when I didn't fully readjust my trade yet. My final target is in the same location and my safety target is still 1-to-1. So the outcome of the trade basically is going to be less powerful than the prior trade. But this trade lines up with my rules where after the moving average updated, okay, I would be buying below the average, which is something that we don't want to do, isn't it? So I had to. Dirk, oh yes, I'm just realizing your question now. Pain plus reflection equal improvement. Yeah, definitely. Mario Jose, EMA went up on the ES. Got it. Thank you for that. Dirk, use the ES charts but open trades on the micro. Exactly. I still have a green UFO on the ES shares at 27. Are you using the same calibration settings as me, Dirk? Okay, my calibration settings are of 0.5 in this time frame. You are probably using 16.18. Maybe that's the reason. Okay, got it. So you know what? Let's do this. Let's move it to 16.18. And to be honest, guys, and we talked about when we did our 2-hour calibration session, isn't it? In the end, it's the same thing. Okay. I mean, it does have implications in the sense of increasing risk, decreasing risk, increasing the opportunities, decreasing the opportunities. So of course, calibration is key. And I mean, we spent 2 hours and a half that day talking about it. So I'm not going to repeat myself. But at the same time, no matter the calibration settings that you use, as long as you remain consistent in your action, okay? In other words, you leave those calibration settings all the time. Yeah, here we go. That's your UFO, isn't it? So then you're going to be fine all the time, okay? So yeah. So 61.8. Yeah, I'm gonna have to also do it for the bottom one. $61.8. Okay, so that way everything is 61.8, like the ones I use in TradingView. To be honest, is better like this, based on what I said. I have an update of that moving average in another 4 minutes as well, to be traded or to be adjusted on the NASDAQ, because right now we don't have anything lining up with the average with the NASDAQ. We do in the S&P but not the NASDAQ. Okay, and you can see that I am not too good at multitasking. Okay, almost done with, well, actually I didn't rectify the react, everything would be 61.8. And I'll be done. So that way, we'll have the same information on the charts, okay? And thanks for pointing at that, dear. Okay, so I got the whole NASDAQ done, and now with the S&P, I'm only missing the two reactive ones, okay? And by the way, we are now approaching our entry, okay, little by little. So hopefully we will get filled. And again, it would be great to get filled in, in very little time. So that way we'll be in the trade right as the market opens. You guys know I personally like that very much. So that way, if I end up right on this trade, normally I get to my targets very, very quickly, very, very efficiently, okay? Okay, so we are like more or less 1 point away from the entry. Okay, I was clicking in the wrong place. Okay, so 69.25 is the current price. We have the entry at 67.5. So, yeah. Okay, that's perfect. Price came back to that red UFO. Hopefully that red UFO will bring the orders. Yeah, and my TradeStation is running very, very slow at this moment in time. This is quite strange. The market is opening now. Yep. Good. So let me see your questions. Yeah, so I need to show you the post. 7 something. So we have the same condition on the S&P. When price comes to 67.5, you know, basically, you know, we'll be there. I mean, the real good entry is just a little lower, but just not to miss it, we agreed earlier on 67.5, something like that. 46, something like that. We got nothing in none of the NASDAQ charts at the moment. Okay, so we'll review that later. But for now, the trade that you guys are ready, you have your orders in the system, real money, paper money, wherever you decided, but you are in. So let's see if the market is nice enough to drop a little bit, so we get filled. It went 2 ticks away from our entry, now it's bouncing. Good news, we have this red UFO that may push it down one more time. And that way, finally, we are likely to get our entry field, okay? In the meantime, as we're waiting, I'm gonna be looking at your questions here. Yeah. Hey, Brian, good to see you. Yeah, so basically the links, okay, and how to get there. What we're waiting to see if we're gonna get nice. The red UFO went away, okay. So now if it falls, we got more space to reach our safety target. That's nice. But we're going to take the trade anyway because we are relying on the trend as well, okay. So you remember, in an uptrend, sell on field orders tend to be removed, okay. So it's fine. But coming back to the playlist, okay. So here in the bottom part, you got playlist. For get together, and you will see that was on May, okay, May 11. We had a session here on sharpening calibration, okay, May 11 sharpening calibration, okay. That's the one that I'm talking about, okay. Anyway, since I am displaying YouTube, it reminds me to remind you to the little bell if you haven't. And also give us a thumbs up if you're happy with the sessions that we do and the session today, okay? Because a new UFO may have formed on the NASDAQ. You can see here that we went very, very close to the average, okay? No new UFO on the NASDAQ yet. On the S&P, we touched the average and we bounced. So this is why I didn't want to use such a low price, okay, not to miss it. But still, you know, we missed it by, I believe it was 2 ticks, isn't it? So the lowest price point here was what? Okay, so I'm going to be resetting TradeStation in a minute, guys, okay? So that way I will have a little more efficiency with the use of my screen, because I can see it's running a little slow. But in any case, yeah, well, I mean, we saw it real time. We went like, you know, a couple of ticks away from the entry, okay? So these trades, our trades, when these things happens to us, okay, we really need to manage our emotions there, because it could be quite easy to get, you know, let's call it a little upset with the market, and it's like, hey, market, you know, what happened? You don't like me or what, right? And next thing you know, now you become very, very eager to take the next trade. Basically, break the rules, okay? Do a little bit of speeding. And when you do a little bit of speeding, you know what happens when you do speeding, right? You get tickets. So we always need to remain in this very, very disciplined mindset where we never break the rules, no matter what happened in the prior trade, which is you either profited, you either lost, or you either missed it. Okay, which is the case. So, you know, we're just going to remain very disciplined. At the moment, the methodology does not imply changing the order to a different location. So we're going to do nothing. We just wait, okay? Or if you are trading other markets at the same time, such as crude oil, it seems that, Brian, you were looking at crude oil. So you can certainly do that. But with this particular one with the S&P or the NASDAQ, we have no trade at the moment. Since we missed the one with the S&P, and with the NASDAQ, we have no UFO forming yet around the average. Okay, so we are just going to be impeccably professional and disciplined people. Okay, that's it. It's that simple. One tick away. It was one tick away, not two. Yeah. So, I mean, realistically, Normally you need 2 to get filled, isn't it? Because you need price to touch and stay a while there where your entry price is, or surpass it by 1 tick. That's how you really get guaranteed to get filled, isn't it? Yes, Brian, and that's why this happened to you. Okay, I just reading that you said your entry was 1 tick up, but you didn't get filled. Remember, futures markets are first in, first out. Okay, so it could be that price comes to your line and you don't get filled. Okay, in the equity markets, it's not like that. Options is not like that either, but with 15 first out. Okay, so that's why I meant just got filled. Okay, so we are in the trade. Okay, so let me see. Yeah, all the parameters of the trade are the same. Yeah, so okay, so this is the second candle that we are in the trade. Okay, so second candle. So let me zoom in, because now we are applying trade management rules, isn't it? So I am zooming in my time-based chart. Notice that the blue arrow is pointing at this candle. We are now in the second candle. Okay, so you know, if we reach our safety target in less than 3 candles, isn't it? Then we'll be very happy. If we don't, so if we reach that safety target, if we don't reach the safety target, then our trade management mode will imply that we are now, using a time stop, and we'll get out of this trade for a small profit, if any, or if not, we'll try to get out for break even. Okay. Because if we don't get to the safety target quickly, it may mean that the trend is reversing, okay, and that would be problematic. Okay, so let's see what's going to happen. And by the way, this type of fluctuation, you need to get used to it, okay, and manage your emotions on that, in that sense too, because especially, I mean, in trading in general, but especially when we are trading around market open, you will very, very often see a nice push bringing you like two-thirds distance to your safety target, and then next thing you know, you go in the red, and you know, it may really impact your emotions, and you may be tempted to close the trade or to do something about it, or to move targets, or to move whatever, and all of these would be, breaking discipline. Okay, so remember, we are in the trade, we are committed to the plan, and we are just doing, what our rules suggest. In this case, we have a time stop in place, which, remember, time stops are optional. So some of you may be executing with a time stop or without a time stop, okay? In my case, I will be using a time stop, okay? And the third candle, if we didn't get to our safety target, which is looking less likely, then I'll have to try to get out for break even or a small profit, okay? So the third candle just started. So we got 2 minutes left, okay? Because 3 candles, 2 minutes each, it's 6 minutes total. So third candle started. And by the way, if you're applying this to Forex, where you use, instead of the 2-minute time frame for time stop, you use it 8-minute time frame. So then it's 3 candles, 8 minutes each, okay? Or 3 candles, 21 minutes each, okay? Good. So, the UFO that we selected here on the right created this bounce, okay? The UFO that we selected in the middle is creating another bounce. Certainly, the price movement and where price is right now below the average, it's not looking too good, isn't it? It's not looking too good. We may have, in 5 minutes from now, we may actually have an actual close below the average. I don't know why this formal window just showed up here. So we have, let me zoom out. Okay, so that is not looking like we're gonna get to our targets, okay? And we're gonna have to manually execute a stop. Time stops, remember, it's an optional action, but if you're using time stops, I would suggest to you to do the same, so you can get out for a little bit of a profit, okay? Or break even. One thing that you can do as well is to, that's it, okay? So we're up. I was going to do it, but it's good enough. So I was going to drag my targets down and get out via the targets. Okay, so basically, you know, we bought at this point, we sold at this point, we just made a tiny profit there. Nothing super magic, nothing super magic, nothing you know, to be that proud of or anything like that. But actually, let's be proud because we followed the rules religiously. Okay, we didn't lose money in the process. We actually made a little bit of profit, and it's nice because notice now the major fight that is happening with having this market to close either above or below the average. If the close happens to be below, now we'll be in a downtrend, and now we may have multiple points pushing down to define a very strong downtrend, or maybe come back later up. But in the meantime, you would have been taking a loss of a much greater size. Okay, so time stop is there to protect. Of course, it has a downside, that's why it's optional, which is that, you know, in the end it may come back and then keeps going and then reach the target and you missed it. Okay, but normally it's not going to be that big of a downside, because if it does come back in the next candle or the next, okay, meaning 15 minutes from now, 30 minutes from now, you may have an opportunity to replan a new trade with a new green UFO above, lining up with a new value of the average, and redo the same thing we did, and next time it will work better. Is that making sense? So good job. And if you have been managing the trade the way I define, I just want to congratulate you for doing a good job in the sense of you know, meeting your rules and being disciplined to do it. So what do we have with the S&P now? Or with the NASDAQ? The NASDAQ is certainly showing more weakness at the moment. It's looking like we're gonna close below the moving average. I want to activate I would like to activate my AutoUFOs, so I find out my targets. Okay, notice that I'm gonna check my targets on the 15-minute time frame, not the 60. Okay, so the target would be 22. So 70.22, that would be the target for the NASDAQ. I'm not gonna look at the 60-minute time frame, because if this close happens to be below the average, notice how the DMI is red, which means that it's gonna be a weak downtrend. Okay, weak downtrend, meaning that here we go, we got a weak downtrend, average located at 43. Okay, we are inside the red UFO. The red UFO just went away, so I will not take the trade. Okay, what about the S&P? With the S&P, we have a close, very undecided close here with the S&P. So let me look at what the close was. The average was 67.19, the close 67.625. So with the S&P, we actually closed above. Okay, with the S&P, we closed above, and we are back to be in an uptrend, which is a strong uptrend with the green DMI. Everything is the same. Okay, now 67. Okay, 67.5 would be the entry. We have nothing at 67.5 in none of the time frames. Okay, if you were super quick earlier, there was a green UFO, but in the real world, I don't think we had time to place an order. So basically, we are still observing, and here two things may happen, which is nothing happens, or the S&P goes down, gives us a new UFO located at 67.5, and then moves up. And then what do? We plan the trade, we wait for S&P to come back, and the moment it comes back, we get long, and now here's our profit. Okay, so again, the fact that we don't have a UFO now doesn't mean it's not going to be there in 2.5 minutes from now. Okay, so we're going to be looking into this. If you look at the reactive time frames, new UFOs are forming. Those are not edge UFOs. They are not UFOs for us to enter. But if we get to see little pockets of unfilled orders on the right, we may have, here we go, we just have a UFO forming on the tick time frame. Okay, now my issue is the same as before. As you can see, 67.75, okay, is located, it would be located, I mean, that's 68, so 67.75 would be located right there. And right there is what? It's the weakest part of the UFO, because the top part is the strongest, isn't it? The dark circle is the strongest part, but the entry would be in the weakest part. So even though if you were to take the trade, it would not be a crazy thing to be done, I will not do it because it has less odds that was desirable. Okay, and therefore I will not plan on using the trade. Notice how all those unfilled orders have actually already been consumed. Okay, So still in waiting mode. What about the NASDAQ? Okay, still in waiting mode for the NASDAQ. Okay, so I think it's a good time now to go ahead and plan 1 or 2 Forex trades, and then we will come back. Yeah, so Orlando, yeah, the reactive time frame, Dirk, you made launch money 10-10. Very good, I get it. Starbucks, Devan, that was a longer term trade. The answer is yes, I'm in, but it's really not related to what we're doing now. So let's talk about it on Thursday, if you don't mind. Here we go. And here. Yeah. Okay. So very good. It seems that I caught up with the questions. If I missed any of your questions, please let me know so I don't miss any. Okay. So Forex trades. Let's begin with the euro. Okay. So I'm looking at the euro. On top, I'm using the 60-minute time frame. What do we have? Prior close was below the average. The DMI was green. So we are in a weak downtrend. So with the euro, if I was to look for targets, okay, I would be looking at targets located at no overlapping levels. The target would be located right here, 112.10. Okay, so for the euro, 112.10, that would be your final target. Okay, in this weak downtrend. So entries, you will want an entry located around where the average is, which is 112.47. So do we have anything around 47? Okay, well, we have this very big UFO here, okay, connected with other UFOs and other UFOs, and all of these things. It's certainly involving, if you wish, that 1247 mark. Okay, but the problem is that given the fact that the target is so close and we got so many UFOs overlapping each other, then the risk of the trade is going to be too much in exchange for the reward. And this is just visually speaking. So I rather go check another currency to see if we have a better opportunity with other currencies, which I'm sure we will. Okay, so we don't need to take the first one we see. But back to the NASDAQ to see what else do we have. Here we go. So we got a trade. So we have a red UFO on the NASDAQ that just formed at the bottom part is 39.5. Okay, the average is, as you can see, 41. Okay, so but 39.5. That would be our entry, isn't it? Yep, 39.5. We also have this UFO here. Here we go. Okay, good, perfect. So let's plan on a short. We know the target will be 70.22. I remember this from before. So 39.5, that would be our entry short. So I'm gonna enter the order 39.5. Buy stop would be located at 53.5. So 53.5 is right there. Okay, that's the safety, that's the stop. So 53.5 minus 39.5, that was the entry. That's 14 points, minus 39.5. That is 25.5. So that was going to be my safety target. Okay. So my safety target is going to be 25.5, and my final target we said is going to be 20. Level of that, and again, when you trade the NASDAQ, the matrix is not the ideal way to do it like that. So 22 is going to be the final target, and we said 25.5 is going to be the safety target. Okay, so right here. Okay, so that's what we have. Okay, so entry and stop. Okay, and target 1 and target 2, which is basically almost where target 1 is. Okay, so limited level of joy, and the reason why is because we are dealing with a weak downtrend on the NASDAQ. Okay, now what may happen if we do have a push to the downside is when the next candle closes, we start seeing red on the DMI. And if that was the case, I want to be ready for this. Okay, if that was the case, we just got filled. So in the trade, okay. If that's gonna be the case, okay, I want to be ready for it, and therefore I am going to look at the 60-minute time frame as well on the NASDAQ to find out what my target would be if we reach that lower point, and the target would be 70.04.25. Okay, 70.04.25. That would be the target if, okay, if in the end the downtrend becomes strong, where now the downtrend is weak. Okay. So, in the meantime, I'm going to be looking at zooming in the time-based chart, so we can count the amount of candles. I would say we are now dealing with the second candle, isn't it? So we got 1 and 2. So this is the second candle that we are in the trade. Not too nice to see the fact that a green UFO just formed, you know. And again, if you were to tell me that this is a trade that you were not fully comfortable executing, I would understand, in the sense that you got a downtrend on the NASDAQ, but you got an uptrend on the S&P. So that almost always is going to generate a little bit of a fight going up and going down. Not because it's the market open, because the market open was like 25 minutes ago, so it's not the case anymore. But because, you know, you got two major equity indexes in the market fighting with each other until, you know, one is going to follow the other one, right? And so these things many times happen. But again, it all depends on your trading style and your trading personality. To me, I'm very happy with this kind of opportunities in the marketplace, because these little fights, it's either they're gonna end up always in one of the two ways, which is you get stopped out very soon or you get to a target very soon. Okay, and personally I like that. Okay, I like that because that way, if I'm wrong on the trade, it's not like I'm waiting and hoping for the best for a long time, but I get to see the final result of the trade very, very quickly, and therefore if I was wrong on the trade, I can go ahead and plan a new trade. And if I'm gonna be right on the trade, same story. Okay, so you know, that would be you know, appreciated based on my trading personality. But again, as I was saying, I could understand that some of you may not be comfortable with that type of trade setup, and therefore you decided not to execute it. Okay, so we are dealing 1, 2, and 3. This is the third candle. Okay, so being the third candle, we'll be waiting. I believe is 1 minute. Actually, we still got 2 minutes to go to wait anymore. So we have a major push to the upside. I'm trying to zoom out. We have a major push to the upside, and that means that it seems that the S&P may end up winning this battle, bringing the downtrend, the non-lasting downtrend on the NASDAQ. We use the DMI combined with the average, by the way. So let me say it, since we have this opportunity. The beauty of this is that it allows you to have targets closer when trading is riskier, and it allows you to have targets further away when trading is less risky and higher probability. Okay, this trade was, let's call it aggressive, in the sense that we didn't have much profit margin and it was still executed, and it was more aggressive, if you wish, because the DMI was not confirming what the trend was defined by the average. Okay, so again, let's start it. It went up to, in the S&P, how high is that? Like 71, 72, and it went down to 64. Okay, so we are talking about 8 points, you know, 8-point range, up and down 8 points. It's you know, not much. Okay, let's put it this way. So yeah, so again, but managing psychology, managing ourselves, managing our methods, and just following the rules. Okay, so nothing to be done until 2 minutes from now, when the trend will be redefined. So we'll come back and look at it. So let's look at another currency pair. We'll look at the Great British Pound right now. So with the pound, we have a clearer defined uptrend. Okay, so the uptrend is price closed above the average. The DMI is green. Okay, so in order to set my target on the pound, I'm gonna look at the 4-hour time frame. Okay, and activate UFOs, and this will tell me that the next valid target is 128.20, as you can see right there. Okay, so 128.20, that would be the target for the pound. Okay, so now that we know this, okay, I'm gonna go back to my 1-hour setup. Okay, and now what I need to find is oh, I just disabled the moving average instead of disabling the UFOs. Here we go. And so what we want, now that we have seen this, is we want to find UFOs around 126.77. Okay, and certainly we do have 126.77 is more or less here, which is that particular beautiful UFO. Okay, also when looking at the range time frame, we don't. Okay, but when looking at the time frames, we do. Okay, so therefore, let me go ahead and when it comes to symbol last value label, so I want to remove the price so we can see it. It's showing me the amount of time left for the candle. So countdown to bar close, disable. Here we go. So the reason why I was disabling those parameters is so I get to see my prices, which is 88 to 73. Those are the two prices at which I would like to buy pound. Okay, so what the plan is gonna be here is to enter long at 26.88 with a stop below 26.73. Okay, oh, actually that UFO just went away, so it's been identified by the app that we no longer have on-field orders at this price level, so that means that this trade will not be executed. Okay, good. So let's go back to the equity market. So what do we have? So the S&P is giving us a close above the average, and yes, weak trend to the downside around 42. Okay, so we got nothing red at 42, and we have the same condition as we had before, which is a weak trend. Okay, so hey guys, today it's a tough day to trade equities. Okay, the market is moving in a very narrow range. It's going down, it's going up, and it's basically going nowhere in a very narrow range. And this is obviously for the directional traders, it's a tough one. Okay, by the way, talking about that, talking about the directional traders, on Saturday we're gonna have a special session, guys. We're gonna have a special sharpening session, and we're gonna have a guest. Okay, we're gonna have a guest that will be exposing us to a methodology on how to trade options intraday to make non-directional profits intraday. Okay, and take advantage of gaps and formations of such sort. Okay, so we'll be talking about that on Saturday. So very quickly, even though I'm changing topic a little there, gives you the calendar, isn't it? And this is the session I'm talking about. Okay, so June 8th, that's gonna be Saturday. It's a special session, okay, because we're gonna talk about a special topic and we're gonna have a special guest. So it's a lot of specials, okay? And then Sunday, we'll do our normal sharpening, okay, which will be related to long-term trading for all markets, including ETFs and stocks and everything. Okay, so we'll talk about all of this, but keep those sessions in mind, guys. Okay, because again, we got 2 sharpening sessions this weekend. One of them will be special. Okay, so what else do we have? One last look at the equity markets to see if any opportunity is forming. Yeah, no. So we have the same market setup. And by the way, Murphy's Law suggests that, and funnily enough, Murphy's Law many times works very well. I'm sure some of you have noticed. Murphy's Law suggests that the moment we conclude our session, you may have new UFOs forming, a new beautiful trend forming, and you guys make sure you take those profits, okay? Of course, we have limited time to be together, so if it doesn't happen while we are together, well, obviously we cannot control the market, okay? But just make sure you don't miss them, okay? Because probably the market will end up building opportunities. So let's take a look at the Australian dollar. We got no UFO with the Australian dollar. What about the Kiwi? With the Kiwi, yeah, the UFOs are too high. With the Canadian dollar, it's 34.3. Yeah, so you know what, with the Canadian dollar, there is a potential opportunity here. So we are in a downtrend. Prior close below the average. The DMI is red, so we are in a downtrend. To set targets, we will activate UFOs and switch to the 4-hour time frame for the CAD. The target would be located at this level, which is, let me zoom in so we can see this much better. That will be 133.52. So 133.52, that would be the target. Okay, 133.52. So back to the 1-hour time frame. Okay, and we will want to enter around price levels which are 134.31, and we have a UFO there at 34. Okay, we have a UFO there at 34. Yeah, it's not ideal, okay, but again, remember, in Forex, different brokers have slightly different prices, and 3 pip difference, I'm gonna say it's okay. So let's go for it, because this trade is about to happen. So we would be planning an entry at 134.34. The stop will be located above 46. Okay, above 46. Okay, 134.46. But remember with Forex, and one of our rules tells us that when it's a buy order, you need to add 2 pips, and when it's a stop, you need to add 5. So 2 and 5 is 7, right? So that 46 plus 7 is 52. Okay, so our stop would be 52. I'm gonna write it down for you guys, so that way we make no mistake. Okay, so we're gonna have a final target which is gonna be below, located at 133.52. Okay, we need to calculate where the safety target will be, and then at a higher price we're gonna have a short entry which is triggering right now, which is 134.34. Okay, and we're gonna have a stop which is gonna be 134.52. Okay, so that would be the trade. Okay, and I'm just gonna place it. I'm just gonna place it. Yeah, so here we go. So selling at 134.34. Take profit and stop. So I want to risk 0.5% of my account on this trade. My take profit will be a safety target. We said 134.34. That's the entry. Stop is 52. So 52 minus 34, that is 18. 34 minus 18 is going to be 16. So 134.16. I'm doing this quickly, guys, because obviously the trade is happening as we speak. So I better run. 16. And my stop is going to be 52. And that's not a buy, it's a sell. So yeah. Yeah, so price is better than what I have now. So I'm just gonna go market with it. Here we go. So I have the first portion of my trade in, and then I'm gonna have the second portion of my trade, again 134.34, with my profit now is gonna be the final profit is gonna be 133.52, and then my stop is gonna be 52 as well, and I'm taking 0.5% risk on the second portion of the trade. So let's sell, and the order is sent. Okay, so basically I am in, orders have been placed, orders have been executed. So as you can see, I'm in the trade, and this trade is currently paying me $11.1756. This is the real-time profit of the trade as we speak, and of course -5 now as the US dollar CAD keeps fluctuating. Of course, you know, you will see positive and negative until finally it picks direction in whatever direction. Okay, so anyway, so that's the trade, guys. Let me see your final questions. John Clifford, the trend is determined by prior candle close and EMA. Strength of the trend is determined by the DMI on the prior candle as well. Okay, on the prior candle as well. Okay. Orlando, I often get confused when I see a strong DMI trend either to the upside or downside. So think about contradiction. Okay, think about contradiction. Is the DMI contradicting the average? If the DMI contradicts the average, it means it's weak. If the DMI confirms the average, it means it's strong. Okay, just think about it this way. Maybe that helps. Jose, is it possible for you to take a trade on the equities? Yes. Let's talk about that on the weekend, because precisely on the weekend we're going to talk about long-term trading. So we'll talk about the equities, we'll talk about the ETFs, and this will open the door for me to also be able to do that. Okay? Fantastic. Good. So, hey, guys, before we conclude the session, would you mind to confirm how did it go today? And also, if you executed the trades, I'd like to know who is on the CAD trade with me, who has also executed the S&P and the NASDAQ trade. Of course, the NASDAQ trade doesn't make us so happy, but hey, that's part of trading, isn't it? I would still like to know, guys, you know, who is with me, and if you haven't taken the trades, remember you always have the choice to execute the trades with paper money. So if you haven't, and maybe the reason is because I went too fast, or there is something that was not fully understood, make sure you tell me, right? And if you don't feel like sharing in the comments box because you feel it's a little personal, send an email, please, and we will obviously not disclose it or anything like that, but that will be relevant information for us to know to help you much better. Okay, guys? So, yeah, so nice beginning of the trade here with $288 that this cut trade is making for me. Again, this is just the beginning, okay? We still need to reach you know, that safety target, you know, to really know that the risk has been removed. Okay, but the fact that we start with this beginning is a good sign in the sense that, you know, on-field orders are there, and that's why price went down. So it's a good beginning. Okay, good. Yeah, Bojan. Yes, choppy trading day, and those are the worst. Okay. When you trade directionally and the market is not defining itself, look at that. You know, the market now, when the NASDAQ that was under the average is now back above the average, okay? But still, it's not like it's above the average, clearly trending. Look at that. The NASDAQ now is touching the average. Today is a difficult day, my friends, okay? So good job, no matter the results, no matter the trade you executed, good job, my friends, because, hey, we can only trade what the market gives us, right? So that's it. Anyway, a pleasure, everybody, guys. Yeah, a pleasure. And I will see you on Thursday for the longer term session. And then I will see you on Saturday for the special session. And I will see you on Sunday again for sharpening. Okay, so a lot of get together this week, guys. Okay, a lot of trading. So see you then. Bye-bye. Take care.